Now going to focus on how to take care of the periodic stock take system in terms of the general ledger. So we are comparing the transactions, recording the transactions involving stock in the general ledger between the perpetual inventory system and the periodic inventory system. So if we buy stock in the perpetual system, we know that trading stock is an asset, therefore our asset account trading stock will be debited. We will credit bank or creditor's control depending of whether we buy on cash or on credit. Now for the periodic inventory system, we won't have trading stock account throughout the year. We will instead have an expense account that we will therefore debit as expense account is increase on the debit side, namely purchases. That's the name of our expense account. And bank or creditor's control will be credited as per usual. So when stock is bought from the petty cash, we know that trading stock increase, therefore debit the asset account. Our asset, the money in the petty cash, will decrease, so therefore credit petty cash as assets decrease on the credit side. In the periodic inventory system, again, no trading stock. Instead, our expense account purchases will increase, and we will still credit our asset account petty cash that will decrease. Now, if we sell stock, we know there's a selling price and a cost price leg. So in terms of the selling price, if we sell on for cash, we know the money in our bank will increase, which is an asset, so we debit the asset. If we sell on credit, we know money will be owed to us, which is also an asset, which increase on the debit side, namely debtor's control. And then we know our sales account, our income account, will be credited. In terms of the periodic stock take system, well, the debit side is exactly the same as for the perpetual system, and the same for sales, so no difference here. But now when it comes to the cost price, we know we keep track of that in the perpetual inventory system. So we know our trading stock when we sell decrease, therefore it will be opposite than when we purchase. It should be on the credit side, and we will debit cost price or cost of sales. But now when it comes to the periodic inventory system, we do not track when we get rid of our stock. So there's in fact no entry. So that's a big difference. So when stock is returned to creditors, we know our trading stock will decrease. So therefore we will credit our asset trading stock. We will debit creditors control, because remember, creditors control is a liability, and liabilities decrease on the debit side. Now when it comes to the periodic inventory system, once again, instead of using trading stock, we will use purchases. We will credit purchases as our expenses decrease on the credit side when stock is returned to creditors. Now if stock is returned by debtors, we again have two legs, the selling price and the cost price. So in terms of the selling price for the perpetual system, we will just have to reverse what we did when we sold originally. So we will have to debit debtor's control, or rather not debit, credit, because we debited debtor's control originally when we sold stock, and then we will debit debtor's allowances, our expense account, that increase. Now when it comes to the periodic inventory system, we also debit debtors allowance and credit debtors control, so there's no change there. But now when it comes to the cost price leg, we know our trading stock, since it's returned by debtors increase, so we will have to debit trading stock, credit cost of sales. So it's exactly the opposite of what we did when we initially sold the trading stock. Now that it is returned, we obviously do exactly the opposite. But now when it comes to the periodic inventory system, you could guess there's no entry. As we made no entry when we sold the stock, we also will make no entry when it is returned. Now if the owner takes stock for own use, then we know that drawings will be debited and our trading stock will decrease in the perpetual inventory system, so we will credit trading stock as it's decreased on the credit side. When it comes to the periodic inventory system though, it will be purchases that will be credited. Our expense account will decrease. We know expenses decrease on the credit side. Similarly, for donations to charity, perpetual, we will have donations debited, expenses increase on the debit side, credit, therefore our trading stock account as our asset decrease on the credit side. When it comes to periodic inventory, we still debit donations, but now we credit, yes, you guessed correctly, purchases, our expense account. Now, carriage on purchases of stock with the perpetual inventory system, it forms part of the cost price of the stock. So, depending on whether we purchase for cash or credit, our bank or creditors control will our creditors control will increase if we owe money, so then we will credit, or bank our asset will decrease if we pay, and trading stock, our asset will be directly debited with the cost of that carriage. But now for the periodic inventory system, it won't be as in other cases wherever we see trading stock purchases. No, we have actually a separate account that we call carriage on purchases, an expense account that will be debited. And we will still credit bank or creditors control as for the perpetual inventory system. Similarly with custom duties on imported stock, same story. Debit our asset trading stock, so the cost of the importation we add to the value of our trading stock, credit bank or creditors control. And similarly for the periodic system, we have now a separate account called customs duty expense account that we debit instead of an asset account so namely trading stock or even an expense account purchases. We rather have a separate account called customs duty, and we still credit bank or creditors control similarly as in the perpetual inventory system. So let's look at some of this visually. So we have on the left the perpetual stock system, on the right the periodic stock system. We know in the perpetual stock system we have the asset account trading stock, whereas in the periodic stock system we have the expense account purchases. So opening stock balance at the beginning of the year, trading stock, we know it's an asset, so we have a balance brought down on the debit side as assets increase on the debit side. But we have no entry in the purchases account. It's an expense account. So we have nothing there yet to count, but we can count the actual trading stock that's on hand in the perpetual system as it's an asset account. Then we buy stock for cash. So we know our trading stock will increase in the perpetual stock system, therefore we debit trading stock, whereas in the periodic system, instead of trading stock, we will debit purchases with bank as our contra entry. When we buy stock on credit, trading stock increase, so we will debit in the perpetual stock system, and our creditors control is the contra account. That's account we will credit. We know for each debit we need a credit. And similarly, in a periodic stock system, we will debit purchases because our purchases expense becomes more with what we purchase on credit. We will also credit creditors control, therefore our contra entry. When we buy stock from petty cash, our trading stock will increase, so we will debit it. And petty cash is our contra entry. Similar thing with our periodic stock system. Our expense purchases will increase and petty cash will be our contra entry, as that account will be credited. Now if debtors return our stock, then our trading stock will also increase, so we will have to debit. The other account credited is cost of sales, and in this case we don't track it in the periodic stock system, so there is no entry. Cost price of stock sold for cash, again, it will, when we sell, our trading stock will decrease in the perpetual stock system, so we will credit trading stock. Cost of sales will be our contra entry, but we do not keep track of that in the periodic stock system, so no entry in the periodic inventory stock system. Cost price of stock sold on credit, same story. Trading stock decrease, so we credit it in the perpetual system, but no entry in the periodic stock system. Okay, what happens when we return to our creditors? Our trading stock will decrease, so we will credit trading stock, but we will also now owe our creditors less, so that's the contra entry. We will debit our liability, creditors control. And similarly, in the periodic stock system, we will decrease our purchases account and therefore credit it and debit creditors control, as our liabilities decrease on the debit side. If the owner takes stock, our trading stock will decrease in the perpetual stock system, so we will have to credit, and drawings will be our contra entry. It works similarly for the periodic stock system. Now expense account will decrease. It decreases on the credit side, expense account, so we will debit our contra account drawings. Similar thing for donations, decrease stock, so donations contra entry. Similarly for the periodic stock system, our expense purchases decrease on the credit side.